Can I really prove that banks create money out of thin air? You've probably heard people say that banks create money out of thin air, but is that really how it works? This idea can be both fascinating and a bit unsettling. In this video, we're going to explore whether banks actually create money or if it's a more nuanced process. The traditional understanding of banking is that deposits lead to loans. When you deposit money into a bank, it then uses that money to make loans to others.
Hi, I'd like
this
to
seems
deposit this
straightforward
cash.
enough.
Of course,
However,
I can
the
help you with
idea
that.
that banks can
Thank you.
create money out of thin air seems counterintuitive or even alarming to many people. It raises questions about where the bank gets the money from if it's not already there. The concept seems to suggest that banks have the power to conjure up money, which doesn't align with our everyday experience of working for and earning money. The traditional banking model doesn't fully explain how the money supply grows. The general understanding is that banks act as intermediaries between savers and borrowers. They take deposits and then lend out a portion of those deposits. This process seems to imply that banks are simply facilitating transactions rather than creating new money. But if that's the case, then how does the money supply in an economy grow over time?
Come from?
Banks operate under a system known as fractional reserve banking. This means they're only required to keep a fraction of deposits in reserve and can lend out the rest. For example, if a bank receives a $100 deposit and the reserve requirement is 10%, it can lend out $90. The bank doesn't lend out the $100 because it needs
On
to
one
keep
side,
$10
savers build
or
assets.
10%
On the other,
in
borrowers
reserve.
carry debt.
This is how
Balance is
banks
key
can
to
lend
financial
out more
stability.
money than they have in deposits. The concept of fractional reserve banking leads to the idea of credit creation, which is a more accurate term than money creation out of thin air. When a bank makes a loan, it doesn't just transfer existing money from one account to another. Instead, it creates a new loan, which is essentially a digital entry in the borrower's account. This new money enters circulation through
From
loans.
100,
For instance,
keep
when you
10
take out a mortgage to
and
buy a
lend
house,
90.
the money for the mortgage doesn't exist until the bank creates it. The money multiplier effect is central to understanding how banks
This amount is
expand
split
the
into
money
a reserve
supply.
portion and a
Here's
loan
how it
portion.
works.
The reserve
When a
portion is
bank
larger
lends
for
money,
security
the
or
borrower
investment.
often deposits that money into another bank. That second bank can then lend out a portion of those new deposits, creating even more money. This process continues, leading to a much larger expansion of the money supply.
With a 20%
For example,
down, your
if the
monthly
initial
payment would be around
$100 deposit
$2,200.
leads to a
well within our
$90
budget.
loan,
Let's do it.
and that $90 is deposited into another bank, which then lends out $81, the money supply increases.
Money is created when loans
The money
are issued.
multiplier effect shows how a small initial deposit can lead to a much
Passing
larger
forward to second
expansion
bank.
of the money
Received.
supply
On to
through
third bank.
successive
Got it.
lending
Forward to
and
fourth.
redepositing.
Final stop. Chain
This
complete.
process isn't limited to just 2 or 3 rounds of lending. It can continue many times over, leading to a significant increase in the money supply. The key point is that banks play a crucial role in this process by creating new money through loans. In summary, while banks don't literally print physical money, their lending practices do expand the money supply through credit creation, which is a form of new money
In the
entering
quiet
the
moments,
economy.
we find clarity.
It's not
A calm
thin
mind
air,
sees the world
but rather
anew.
a complex
Pause and
system
reflect,
based
and
on
let peace
trust
guide
and
you.
regulation.
Not magic.
This process
system
allows
of
the
credit.
economy to grow by providing more money for loans, investments, and spending. If you've made it this far, you probably have some thoughts on how banks create money. We'd love to hear them. Share your thoughts and questions in the comments below. If you're interested in more videos that demystify complex financial topics, be sure to subscribe and hit the notification bell.
You can stand under my umbrella.